Introduction. Hello and welcome to a most informative video on ETFs. Today, we are going to talk about exchange-traded funds, ETFs. ETFs are becoming increasingly popular among investors as a low-cost, diversified investment option. In this script, we will explore what ETFs are, how to invest in them, how they work, their use in foreign markets, and the pros and cons of investing in ETFs. Finally, we will address the question of whether ETFs are more effective than shares. Exchange-traded funds, ETFs, are investment funds that trade on stock exchanges. They are similar to mutual funds, but with some significant differences. The main difference is that ETFs can be bought and sold like individual stocks, while mutual funds can only be bought or sold at the end of the trading day at the net asset value (NAV) price. To invest in ETFs, you will need a brokerage account. You can buy and sell ETFs through your brokerage account just like stocks. When you buy an ETF, you own a share of a basket of assets, such as stocks, bonds, or commodities. ETFs can be bought and sold throughout the day, just like stocks. ETFs are created through a process called creation and redemption. Authorized participants, which are typically large financial institutions, can create or redeem ETF shares in large blocks called creation units. When an authorized participant wants to create an ETF, they buy the underlying assets and transfer them to the ETF provider in exchange for creation units. When an authorized participant wants to redeem an ETF, they give the ETF provider creation units in exchange for the underlying assets. This process keeps the ETF's market price in line with the value of its underlying assets. An example of an ETF is the SPDRS and P500 ETF, SPY, which tracks the performance of the S&P 500 index. When you buy a share of SPY, you are buying a small piece of each of the 500 companies in the index. As the index goes up or down, so does the price of SPY. ETFs are not limited to domestic markets. They are also available in foreign markets. For example, the iShares MSCI ETF, EFA, tracks the performance of companies in Europe, Asia, and Australia. Investing in foreign ETFs can provide diversification benefits and exposure to international markets. There are several advantages to investing in ETFs. First, they offer diversification benefits because they hold a basket of assets rather than just one stock or bond. Second, they are low cost, with expense ratios typically lower than mutual funds. Third, they are transparent, so investors can see exactly what assets are held in the ETF. Finally, ETFs are flexible and can be bought and sold throughout the day, providing investors with liquidity. However, there are also some disadvantages to investing in ETFs. First, there can be a tracking error, which is the difference between the ETF's performance and the performance of its underlying assets. Second, ETFs can be complex, with different structures and strategies that can be difficult to understand. Finally, ETFs can be subject to market volatility, just like individual stocks. If you have seen the video till here, do subscribe for more such super informative videos and don't forget to check out the channel regularly. In conclusion, ETFs are a popular investment option for investors who want low-cost, diversified exposure to a basket of assets. They can be bought and sold throughout the day, providing liquidity and flexibility. However, ETFs also have some drawbacks, such as tracking error and market volatility. When considering whether to invest in ETFs or shares, it's important to weigh the pros and cons and consider your investment goals and risk tolerance.